All right, what's good, people? It's your boy Chak Investing back here with another video on the daily NQ review slash ES as well. That we'll be using that as a supporting particular contract that I like to look at simultaneously with NQ. So today we're going to be covering two things, right? One is how to identify that a day that's likely to be choppy. Today was a choppy day, and I'm telling you that if you can pinpoint some characteristics that are key of what is likely to be a choppy day, you can avoid a lot of drawdown, right? This is really how a lot of people become profitable. You've noticed that, okay, you catch a lot of winner trades, but then you just catch too many losing trades. Like, just because you're a really good trader, a profitable trader, that's not going to stop you from taking losses. How you become a profitable trader is by minimizing those losses. And how do you minimize those losses? You need to identify which conditions are the most likely that you are about to, that is going to be indicative of you having a choppy AM session or a PM session, right? So we're going to be going over, today's AM session, why it was so choppy, and as well as we're going to be talking about the flagship model on this particular channel. It's called the ICT 2022 model, right? It's the model that he taught in the ICT 2022 mentorship, arguably the most profound series of trading videos on the entire internet. And he said that this model, it's so simple that he would teach it to his daughter, right? If he could teach his daughter anything, who's, she doesn't trade, this is the model that she would teach. So we'll be going over that and a couple of examples of what we saw today. Ones that we shouldn't have taken, ones that I did take, I shouldn't have, ones that that I missed maybe and that I could have taken, things that I did take and I did win. So we'll go over those, right? And we'll do a daily review, right? We're going to start with higher time frames because higher time frames trump lower time frames on this channel. That's what I always teach. All this sounds good and well, and you're excited about watching this. Press that like button. You can press it right now. That's like your form of payment. That's saying, hey, Chica, here's $5, or here's a like button, right? Thanks for talking about this. Second thing is also subscribe. Press that notification bell as well. Press that subscribe. You can do it right now too. I mean, you're a pretty cool person. So I know cool people. They press the like button and they press the subscription button. So you can do that too if you want. That'd be great. Now let's, without further ado, let's get started. All right. So first, I want to just go over what the 22 model is, right? Because I use that a lot in this teaching. All right, so the 22 model, and if you already know what this is, please skip ahead. And by the way, this is going to be very, very short because I typically talk about this a lot. Or I have another video that I've gone to this in depth. That's going to be at the end of this video that I place here. Now, make a high, make a low, higher high, break up market structure right here, break up market structure. There has to be a fair value gap, right? A fair value gap is a gap in between two candles where it's just a body. And we return either to a discount array, which is the high, or an inversion fair value gap here, or a breaker, or we return to this fair value gap and go higher, right? And in my video, in the end, I talk about why sometimes you won't go to this fair value gap or not. Fair value gap, if you see it stay open, it actually acts as a breakaway gap, and sometimes that's actually really, really great for your trade, because then actually all the time it'll be really great for your trade because it shows that price is so strong it's not even willing to return back to this fair value gap. Now, price could be like, in a series of lower lows, lower highs, right? And then we get a sweep of liquidity right here and then a breakup market structure, right? At a, tapping maybe a key point of interest, like a 4-hour fair value gap or 1-hour fair value gap or an order block, right? Or price could be continuing. Sorry, that was ugly. Price could be going higher, creating higher highs and higher lows. Then we have the short-term purge liquidity, which is really a continuation purge, right? It's a continuation purge. And price really is just using that to get some more liquidity to keep going stronger and displaces and continues higher towards the draw on liquidity. Now, that's ICT 22 model. We'll be going through examples of that, but first and foremost, let's talk about the daily review and go over some choppy conditions. Like, why would the 22 model not work today when you see it? Because of certain conditions that are not good for your trading. And this is helpful for any kind of trading model. So without further ado, I'll stop yapping. All right, so let's start with the daily profile. Going over daily bias here. So yesterday, based off the Trump winning the election, right, we took out all-time highs on NQ futures, right? Price has just been going up all week because we had that daily SMT right here. We had this purge of liquidity. We had S&T with ES below here. And, you know, we could not take out a lot of these levels, right? We just started going the opposite direction. We closed above this daily civvies and the weekly civvies over here, right? And we started taking out key highs. We took out this high and this high. We did a lot this week. So what should I tell you? When you see a very large expansion week like this, what does ICT usually teach? Accumulation, manipulation, distribution, right? So we just distributed all week. We're probably going to accumulate, right? On a Friday where, I mean, there was news, right? Came out, but it's really orange folders, right? It's orange folder news. Nothing too high impact. We've moved a lot we've moved a lot throughout the week. Now, yes, you can get a TGIF, which is a retracement into 20 to 30% of the weekly range, which is this particular level right here. Typically, on the weekly, you don't get like a really large candle like this. You don't really get a really large candle like this. You usually get some sort of like retracement back into the 20 to 30% of the range. Like these wicks here and here are a little bit more than this wick, right? Because typically you're returning at least at a 20% of that weekly candle's range, right? And only in rare instances where price just really shoots up all week. So we did not make it back to the 20-30% on the level because we're just so bullish because of Trump winning that election. And we moved a lot yesterday and days before. So it could be reasonable to anticipate, especially after hitting, and think about it. Another major reason is because we hit this all-time high. Think about it like when you're trading the AM session, like sometimes when you sit, you see that you hit a weekly level or a previous week high or previous week low or like a weekly civvy, like after prices moved a lot to get there, we just start consolidating for the rest of the session. Like time frames are fractal. That's what's happening here, right? Like we just hit this all-time high. We're not showing a willingness to soar through it, right? We just purged it. And this Friday, we're clearly, you know, didn't show a willingness to really expand in any direction. So we're just chopping, right? Prime conditions for us to probably just chop on a Friday where people have already made a lot of money during the week. They're like, all right, I'm not going to like, you know, I'm just going to go to Florida, chill and, you know, hang out and not really be too active this Friday, right? So you just have to think about it psychologically. So how would you think about this, like when you're coming into the market? Like when you come into the market, think about what's happened previous days. Think about what the objectives that we've already achieved, and like, is it likely that we might have a choppy day? That is what these are just two things that I've mentioned so far. We've hit this all-time high and we've moved a lot during the week, right? And it's a Friday, so those are already conditions for it to be choppy. Now, let's look at the 4-hour. On the 4-hour, you can see that we did have S&T with ES because coming in, like this high did not take out, sorry, this high did not take out this high, right, on ES, but it did on NQ around Asian session, which is why you saw this big bearish candle come back down into this 4-hour BISI. But coming into the AM, right, after London session, you know, this is like the London session reversal, New York. This is a London session manipulation and New York continuation of that reversal move, right? So price came in, came into this 4-hour BISI, only closed in the upper half of this 4-hour BISI. Like, look at that, really carefully. We only closed in the upper half of the 4-hour BISI. Remember, I teach you guys a lot on this channel that if you see something like this pattern where we're not closing through the consequent encroachment, but instead we close on the upper half of that, that should give you a sign that price is actually not as bearish as you think it is, right? We're actually pretty bullish. So how would that inform your trading? You're only looking for longs for the rest of the day until maybe around like 3 p.m. where we can get some retracement back into the range, right? And so we're closing the upper half of this 4-hour BISI, and then we start going higher, forming a bullish order block in the process. Plus, we didn't really have any directional move. And look at how like low volume this day was, or like how much we did not move today compared to the other days, right? Because it's a Friday and we've already moved so much. We did have this SMT, which would have made me feel like we're probably going to go bearish for a while, but we did like close in this 4-hour fair value gap, so that invalidated this SMT because we closed in the upper half of it and we just kept going higher. So, you know, if I saw a next candle printing lower, then I would have thought that, yeah, maybe this SMT is actually validated and we're probably going to continue to go lower. But when you're in choppy conditions, sometimes you can see SMT forming, but it's not really like true SMT, right? It needs to like be very obvious that prices start expanding away, and then you know that this is pretty valid. So that's what happened on the 4-hour. Let's go on the 1-hour. ST again. See, we really didn't make much movement overnight through Asian, and then going into 5 a.m. at the end of London, we dropped heavily and into that 4-hour value gap, only closing the upper half, and then starting around, you know, pre-market session, we're hovering in the bottom half of this 1 hour SIBI. So because of this like break of market structure below this low here, we took out this high and we had this fair value gap. That is actually a 22 model, right? Because we had this high, got taken out by this high, break of market structure right here, fair value gap. And then, so when I saw this around 8 a.m., I thought that price was going to be bearish, right? Because we're at such premium highs. We need to come back to this TGIF level, which is the 20 to 30% of the range of the weekly high. I'm sorry, of the weekly candle. But, you know, once we came into the AM and I saw SMT on the lower time frames right here, we're clearly closing in the upper half of this 4 hour busy. And we close to the consequent encroachment of this 1 hour SIBI at the, you know, coming into the 10 a.m. After the 9:30 open. Like, and look at the next couple candles. We're staying in the upper portion of this particular 1 hour SIBI. Like that shows you that we're actually bullish, right? And you shouldn't be looking for shorts anymore. So that's why it's important to like also look at like higher time frames when you're looking at lower time frame movement, because if you are observing this in the 1 hour, then you're also going to be likely like noticing that, okay, I shouldn't be looking for shorts anymore. I shouldn't be bearish anymore, because obviously price is starting to show very bullish action, right? And admittedly today I took 2 shorts in the morning on full risk, and like that's just, I have to be honest, like that was very stupid. Like I should have noticed right away if I was paying attention to these higher time frames, which I honestly wasn't. I was in a meeting and I was distracted. That, you know, price was really bullish because it was showing bullish order flow. But I was so married to the fact that we were going to hit TGIF levels that I didn't notice this bullish follow through, right? And we're really delivering from this 4 hour fair value gap, right? We even tapped this 1 hour BISI right here. We just tapped that as well. That's nested inside that 4 hour. We just tapped it right there. You see, we just tapped it. And I didn't see that. I'll be honest. So I still haven't gotten to the other things I would have showed you today. Would have been a choppy day. There's 2 more things I wanted to show you. So just please be patient. Also, if you like what you're hearing so far, press that like button. You can still press it now. Also, you can comment below any questions or anything that you want to learn next, anything you've had any questions about. Also, I have a Discord, free one, that you can join. Please look at the link below for that as well. And subscribe. Don't forget to subscribe. So that's what happened on the 1 hour, right? And then going to 11 a.m., we closed, and then during lunch session, we kind of consolidated, but then going to the 1 to 2 p.m. session, we expanded higher, taking out these LRRs, right, from the London session. And you can see on ES, we had a way more, like, another sign that, like, I was also, like, we're actually bullish is that ES, like, was just expanding, right? Like, coming into 9 a.m., open right here, ES started expanding higher. And typically, like, I would have thought that was an SMT, but look at this really strong closing candle. Like, an SMT is going to close over this and then, like, wick lower and reject. Like, this is a strong bullish order flow on the ES, and like that's going to drag NQ up. So I really should have been paying attention to that. NQ maybe actually not be as bullish as it was, as I thought. Oh, sorry, as bearish as I thought it was, right? Plus, like, we're still riding off some of that Trump election, like, bull trade. That's probably dragging price up as well to end the week as well, right? So that's pretty much happened. We took out the previous day high again after sweeping it already a little bit during the Asian session, taking out the intraday high right here as well. And then we kind of just came back into the range and consolidated around this 1 hour fair value gap that formed late in today around the 3 p.m. session. On the 15-minute, this is where I like to start looking at the opening range gap. So we formed an opening range gap, I believe, lower, right? We formed an opening range gap lower. And we immediately retraced. Actually, let me talk about something real quick. Look at this movement right here. This is one of the things that made me think that we're also may have a pretty crappy AM session. London, completely like, so London going into pre-market, or London, like this time from like what, 4:30 to 6 a.m. How many points did we move here? Had a 117 point drop, right? So we moved a lot, right? Before the 9:30 opened. If we have been consolidating like pre 9:30, let's say even starting from London and all the way just consolidation to 9:30, and no pre-market real movement, then like one, I would either need to really see us expand away as soon as we start trading. Like I don't want to see any coming back and forth and overlapping the range, right? But as soon as I start to see candles like this, like I was like, okay, yeah, the move overnight, when you have a large move overnight like this, watch what happens when the 9:30 opens. Like we start to just chop around, right? It's likely that we start to do that, especially if you see candles that aren't really giving you very, very strong price action. Like after this bearish candle came, and I already had a bearish bias coming into here, I wouldn't have wanted to see this bullish candle come back up. I wanted to see like just like us starting to fall immediately through this 4-hour Fair Value Gap. But we didn't get that. We came right back up with a strong candle. Like, you know, this candle started wicking back down again. This tells you that we're probably just going to have a pretty trashy AM session, right? When candles start overlapping like this and back and forth and closing back and forth, like that's going to tell you that conditions are not right. Here's another thing. London also took out Asian's high and low. So that's how you also know you may have a seek and destroy profile coming in the morning. So I've given you guys so many tools right now. So many tools that you can tell where if you have, like what I would do if I were you is I would create a checklist of these things that I've said. And in the morning, check if they've happened. And like that means you need to lower your risk, right? Going into the market. Like go half risk instead of what you fully risk. If these conditions aren't present, then it's right for, you know, for full risk. So notice how this is the London from 1 a.m. to 5 a.m. This is 8 to 12. Notice how like London has now taken out this high, also taken out Asian's low, right? Like we've taken out both sides of the market here, and it's just like chopping around. It's telling you that this AM session is likely to be a seek and destroy, where we're just going up and down, up and down. Yes, it's a little bit directional, but on lower time frames, like the 1 minute just looks very choppy, right? Look at all these wicks on the 15-minute. 1 minute is going to look very choppy. So that's two things that we've noticed here, where we had this large move overnight. We've had a lot of consolidation here, and we had the Asian high and the Asian low taken out by London. And anyway, so just going into what happened today. 6 a.m. we tapped this 4-hour. Basically, we're hovering in the upper half. We're hovering in the lower half of this 1 hour, right? And then we break through, and then we immediately come and fill at least half of the range for the opening range gap, a little bit above it as well. Reject away, but we can't make it below these lows. By the way, there's SMT here with ES. Price starts to come back into that opening range gap and closing in it, and just basically trickles higher, right? Making it above the 1 hour consequent encroachment, and kind of just hovering around that and above the opening range gap. And then ultimately we take out London's high, and we take out the intraday high going into the 130 session. And once we did that, we kind of consolidated around. We did form this 15-minute Fair Value Gap that we ultimately retraced to, right? And kind of reject away, but not too much movement, as you can see, coming into the PM. Especially after a busy AM and a large range week, and like no strong willingness to actually really go anywhere after such a large movement. On 5-minute, Fair Value Gap opens here. Price just basically chops around, right? Like we inverted this particular 5-minute Fair Value Gap at the open, but then we came back and completely overlapped it again. Sorry about that. Completely overlapped it again, right? This is another indication that we're probably just kind of a pretty choppy morning. We're not respecting this Fair Value Gap. Like if it came through like this, it should have just like stayed in the lower half and continued to go lower. The fact that it overlapped it again, like just get out. Like just based on what we've seen overnight, Asian high and low getting taken, had a large range day yesterday and throughout the week. It's not showing a willingness to go down to the TGIF. We have these 4-hour Fair Value Gaps in the way. Like it's just gonna be choppy, right? You want to see like clear PD arrays like this that are failing get respected to go lower, right? We should not have come back and closed back above that IFBG, which we did, right? And so we do like form another Fair Value Gap here. Price comes back to that, but you can see we just chop around. Pretty trash. Eventually we take out these LRRs, right? Around 11:55 macro. And then we just basically hover all the way higher, taking out at high. And then we did have SMT here between ES and NQ, where price started to break down. We let this Fair Value Gap in the way, these two. We never traded back up to them to get a nice clean 22 model entry, because look at this high, low, higher high, break of market structure, Fair Value Gap in the way. I would have loved to see a little bit of retracement into like this Fair Value Gap right here, and then we could just go lower. Maybe take out some of these LRIs. Look at how much low resting liquidity is right here. We've taken out all this side of the market. Now we have all this left. So starting around like the 250 macro, really at the end of the 2 p.m. session, we start to retrace. We have that SMT right here. And we have that SMT. So, you know, that could have been a valid short. And where could you have gotten in, really? I mean, really, what could have been a nice entry, where I really should have got in, is at the below of this breaker. I've taught on this channel before that if you have a close below the breaker right here, if you have a really strong close below it, like the breaker can stop us from coming back into the Fair Value Gap. So you can enter at the low of the breaker, place your stop at the high of the breaker, and maybe the high of the candle of the fair value gap right there. And you can aim for a 1 to 3. Wouldn't have gotten that, right? But would have taken out most of my trade, around half of it, right? Half of my trade would once we got halfway, I would have taken out half my trade and then let the rest run. Probably take out another partial right here once we're starting to get closer to my 1 to 3. And then set my stop to break even. If it comes back and stops me out, probably around 4 o'clock once the day ended, I would just pull out the rest of the trade. That could have been a good 5-minute trade. There were also better entries on the 4 and 3 and 2 minute we can go over as well. That's the only valid short I would have seen today. Let's go on the 1 minute real quick. So I took this particular 22 model trade where we had this high right here. Let's go closer so you can see it. And this is one I admittedly should not have taken, right? We had 10 a.m. news today. So the real move didn't really start until 10 a.m. as well. So this is another 22 model that would have been nice. But I took this right at the 9:30, right in the open because I saw the displacement below and I saw that 5-minute inversion value for value gap get closed through, right? So admittedly, because I had a bearish bias in the TGIF, like that's fine. But once I saw price come back up here, should have known that we're we closed and overlapped over the 5-minute for value gap again. Like that's when you could have known that price is likely to just not have a really good price action day. So, and plus, this is not a very clear 22 model, right? Like, notice how it's very hard to see, like, this is a high and like this low, and like you want clear 22 models. So, admittedly, like, and a lot of times I've noticed that I've lost when I don't have a very clean looking 22 model. Plus, look at all these LRRs right here. Like, I don't want to see those kind of things. I want to see that getting taken out and then moving away. The only other valid one I could have seen that that honestly like I would probably take every time, but I could have taken it on half risk once I saw that 5 minute for value getting disrespected. Is this low getting taken? This high getting taken out by this high? Break a market structure with this low, very large for value gap. We're back below the 5-minute for value gap. We come back and we tap this particular could be right here. I believe that's at least we didn't even get 50% of the range. So we're still in the premium of that. Sorry, discount, major discount. We just kind of tap it, we close below. Once we start expanding away like this, you move your stop above here. And because if we come back up, like look at how much choppy we were after that. Like once you came back up, it invalidates the 22 model. The best 22 models are when we just start going away. That's the only one I would have said is okay to take. And this is at the 10, this is at the 1050, this is at the 950, 10 macro. So it's a good time of day. The price start expanding away, but we still had this liquidity over here. We took out liquidity here, but we still have liquidity above here. So price starts basically gyrating around, no real good movements until honestly, like maybe this macro right here around 1050 to 1110. We break market structure right here. We didn't really take out any nice lows like for a very obvious 22 model, but you see eventually we do take out this buy side of the market right here around the 1150 macro. Like that was a draw on liquidity because obviously we're showing a willingness not to want to go lower. And plus, if you look in the 1 hour, like around that time, we had started closing above the 1 hour SIBI, consequent encroachment. So I knew that on a 1 hour, we started showing bullish price action, which could have informed my shorter time frame trading, right? So I need to be looking at what's happening on the 1 hour and 4 hour very closely intra-session. We kind of consolidate all the way through lunch, no real movements. This is kind of like a 22 model right here, low, high, lower low. Very small fair value gap, breaking market structure, just not very clean. Not one I wanted to take. Plus, like, I already had a bearish rise in the day. And we could have taken out intraday highs and above London and all that, but like, it's not a very high conviction trade right here. Kind of disgusting looking. So we have this SMT right here is really the best 22 model that I saw today. This high, this low right here, higher high, breaks lower market structure, fair value gap right here. That's your entry. Your stop is above the breaker right here. This breaker. Aim for 1 to 3. Would have just got it. Would have just got it. Just got it. Right, so you enter right here. Stop is right there. Once you start expanding away and we close below this low, move your stop right here. Price should not come back up higher. Price starts respecting premium arrays. You can see we respect this order block right here. This order block right here gets respected with this wick as well. Continue going lower. Half your trade comes out here, right? And I think the reason why I didn't take this trade is one, I didn't even see it on the 1 minute. Like I wanted to see a 5-minute displacement. We had closed through on ES. You can see we had SMT at those highs. Plus, we had closed through this 5-minute inversion fair value gap. And on the 15-minute, we had this BISI below as well, the target, at least. And we have this one below here as well. Plus, I would like to see this low get taken out, ideally. So ES was also showing price action that was bearish. We had a nice close down here on this 15-minute. But we had this SMT at the highs, right? And at 5-minute inversion fair value gap got closed on. We had all this external range liquidity taken out. The intraday high had been taken out. Had all these clear LRRs below here, right? So that could have been a nice draw on liquidity and a nice play to take a short. And time of day right here, we're about to enter the 250 macro. So it's a good time for us to expand away and take out obvious liquidity. So this is a really good ideal 22 model. The one that I could have taken today that I did admittedly miss, and that is totally fine. But beyond that, you can see how we just chopped for the rest of the session. We didn't really get much play, and that's just because of everything else I mentioned today. But that is today's review. Let me know again. Press the like button. Make sure you subscribe for more. Don't miss, and press the notification bell so you don't miss a single one of these daily reviews as we're learning how to trade the 22 model on this channel. And yeah, peace and love, guys.